Good evening, everybody. Welcome to the Lock in Your Success Trade and Market Updates for September 16th, 2012. We had another very bullish week in the markets, which was somewhat expected. And let's dive right in and take a look at the charts. Here is a 5-year on the SPX. Let's just shoot down to 1 year. You can see we had a very bullish week last week, and that continued on this week with the Fed announcement. The move this week is very important technically. This breakout from this cut pattern here. If this breakout move actually holds, that has very bullish implications on the market. So one of the things we look at when we're doing technical analysis is price patterns to set price targets and to gauge the general direction of the market. What we have here is we had a nice, we put in a nice cut pattern and then broke to the upside. Now what we'll do is we measure the cut pattern from the top to the bottom here, and if you go ahead and do that, you'll basically take that point value and tack it up on top of our breakout, which was right into here, and if we do that, we actually get a price target of around 1575, which is very close to our all-time highs. And the question is, how long is it going to take to get there? Well, what we do is we just measure the time of our price pattern, and that should put us there. If we go ahead and measure the time on this price pattern and the magnitude of the price pattern, we come out with hitting our all-time highs sometime in January, February of 2013, which is going to be 1576, which would be a very aggressive move and would require the SPX to more or less hold this trend line as support. We shall see if that happens. Of course, news can change everything. Personally, I think we're overextended, so I'm talking from a purely technical level. We should be at 1575 by the end of the year or early next year. What will change our mind is if we get a breakdown down under this 1425 area, or 1420 probably more accurately. So let's take a look at the other indices and see what they're giving us. If we take a look at the Dow, we have a similar situation where we have this nice cup, and if you measure from the bottom of the cup to the top of the cup and add on top of that, you get actually 14. Let's go to a 2-year chart because I wrote it up here. You get a number of 14.7, and if you measure the time, that puts us January of 2013 to 14.7. Again, in order to hold that, we have to hold this very aggressive trend line to the upside, but from a purely technical point, that is our price target. If we look at the NASDAQ, we have the same thing. We have our nice cup, we got our breakout. It retested and bounced on Thursday with the Fed announcement, and that puts us in line for a 3150 price target sometime in January or February. And if it holds this this channel here, then of course we're going to hit that. And which brings us back to the rut. Same thing. We got a nice cup, nice breakout. Gives us a price target of 954 in January. So from a purely technical standpoint, that is where it looks like the market's going. Let's start looking at some practical stuff, however. The markets are near all-time highs. Russell has almost exceeded its all-time high on Friday. The SPX is still a little ways from its all-time highs, but we are certainly overextended. The Dow is nearing its all-time high. Its all-time high is 14,198. We still have another 500-600 points there. And the NDX, of course, had its all-time highs way back in the tech rally. If we go to a long-term chart there, I do have my Fibonacci's drawn in, and this is what we use for for a situation like this. We use the Fibonacci lines from the drop here, and our next Fibonacci level here is at 13,280, which isn't all that far from 3150. So 3280 is not too far from 3150. So those are the resistance levels there. What I'm saying basically is we're very overextended, and I would expect that the markets pause sideways or come down. One of the things we look at on our shorter term charts here is how far we are from our moving average. If you look at the S&P, it only gets so far, usually 30, 40 points or so, and it doesn't normally get much higher than that. If it does, it's a capitulation and a sure sign you're probably coming down. We're sitting about that level now. That doesn't mean we can't continue up at the same rate the moving average is going up, like what happened back here, right? We got this just continuous grind, and we held for an extended period of time over our moving average. But what it does mean is the very aggressive up move is probably done. We're due for the markets to come down and retest. If we retest here, we're probably going to retest the area of around 14 and a quarter. That wouldn't be out of the question. To have a little bit of consolidation for the short term. However, longer term, again, we are completely bullish unless we get some sort of a breakdown under this level here. The Dow, same thing. We're not actually all that overextended on the Dow. We are well over our 20 moving average. Again, we may get a short-term pullback. We may go sideways. There's nothing to indicate that we're going to go bearish. And again, I wouldn't worry about being bearish until under 13.3, about at 13.330, I think this is, right around there. And on the Nasdaq, again, as long as we hold these levels of around 2,800, we are still very bullish. If any one of these starts breaking down under their cups, then that gives us concern for a market reversal. Until then, we may have a retest of these areas sideways or grinding up. We're probably not going to get an extensive up move, but either way, like I said, we are bullish. Come back to the Russell. Russell has to hold, or should hold, this area way down here, which is 820. We're still bullish if it holds that. It may come down as low, well, 820, 830. It holds this area here. We're still bullish. So even if we come down to the bottom of this channel, and hopefully that's what we get. We hopefully get some sort of retracement here, get us into help out on our October, and pop me out of my September M3 if we get a pullback to 830. I don't think we'd go much under that. I think we should hold that area. So that's what we have for the markets. Like I said, we're overextended with the news that came out on Thursday. I think you may have some profit takers. You may see the market pop down 30 points or so. Or the Russell popped down 30 points. After that, we are bullish again. So, keeping that in mind. As far as a shorter-term price target on the Russell, let's just hit that really quickly too. We have this smaller cup in a shorter-term chart. We have 820 to around 760. Let's call it 760 to 820, 60 points. 820 and 60 is 880. So our shorter term target for the Russell is going to be 880. And I would say that would go for the month of October. I'd like to see 880 in October. Again, we were expecting to see these 865 or so. That is correlates with the all-time highs in the Russell. That was completely expected. I did not think I'd see it this month. I thought we would cycle down one more time and I would see it next month. However, like I said, news can change everything. We blew the top of the channel, and we'll have to see if the new trend line holds or not. It may fail like it did back here. See back here, we popped the top of the channel, we drop right back in. If we drop right back in, it puts us more in this level for a while. And again, that wouldn't be a surprise. To pop back into the channel, run down into here would be completely normal. All the way down to the 820 level would be normal. Break under that would be kind of abnormal. So we'd have to watch that for a large down move to this trend line here. But a pull down here it would be normal. And if that were to happen, I would say sometime late in the year, usually probably the December rally, will rally back up over this and hit higher. But it remains to be seen. We'll see what happens next over the next couple of weeks and go from there. So we're overall bullish. Let's take a look at our trades. This is what I have left for the M3 trade in September. I was holding this more or less in this position here. And when I got the large up move on Thursday, a lot of times what happens when you get these large up moves on news is they blow off out of their trend channel, like this one here. If you just take a look at this trend channel here, okay, you'll get a move that blows the top of the trend channel, and then the market just flatlines sideways back into the trend, or a lot of times it'll come back down. Considering that this is kind of what we have here, I was very concerned about the market flatlining and falling into this hole here of being down 2,800 or 3 grand. So since I thought the market was likely to do that, especially the way it's been kind of going up and just kind of flatlining on us, that I would go ahead and more or less give up on this trade for the month and give myself an opportunity to win if we get some sort of a normal pullback. So what I do a lot of times is I will reorganize the trade. So like this, I sold my 810 butterflies, and then I sold my 2 extra 750 2 extra calls I had on, and it puts me in a position here where I'm basically, I think I was down $1,200 when I did this. I'm risking another $100 or $200 on a trade this size, which is no big deal, and I can just expire the trade. I don't have execution risk. You know, if I'm trying to pull out of butterflies that are down at the 790 level, which is what I'm at now with spreads and everything, I have some execution risk, and there's a good chance that, you know, if I was down $1,200 and I tried to trade out of it, there's a good chance I'd be down close to $1,400 anyway, especially after all the commissions with all those getting out of all those positions. So instead of doing that, I just went ahead and made this move here. And my thing is, I'm just going to let it expire, unless of course the market backs down, and then we have something to work with again. So I'm going to let this expire at about a $1,300, $1,400 loss, which is about 3%, a little less than 3% loss for the month, which is excellent. Like I said, we've had March, April, May, June, July, August, all excellent months. And this is the great part about this trade, is usually when you lose, shouldn't be pulling max loss out of this. You should be losing maybe a couple of percent if you're trading it right. And this is what we have here. And again, if we get a normal pullback, because we are overextended and pop back into the channel like we were talking, if we get a normal pullback, pop back into here, run around the 820 level, this will look good, and we will be able to take a profit and move on. I'm not necessarily expecting that to happen, but it wouldn't be out of the question for something like that to happen, or at least come into the 840, 850 area and drastically reduce our losses down, so that we're closer to a break even for the month. So that's the September M3, and like I said, we're probably going to either sit here, we get a pullback, I'll gradually try and raise this expiration line up, see if we can't shave off a little bit of these losses. But considering the market movement, I am perfectly happy with this. I think probably half of the traders trading this made money this month. Some of us broke even, some of us took a bit of a loss. It depends on how aggressive you were with the upside adjustments. I was not expecting, I read the market a little bit when I trade, so I was expecting to come into the top of this trend channel and then pull back in here. And at that point, that wouldn't have been an issue. However, that never happened. And we got the Fed announcement, and the traders were overexcited and blew the top of the channel. So that happens. I don't mind it at all. It's been a very, very good year. All right, let's take a look at the bearish butterfly for October. Earlier in the week, we were sitting at 810 and 830 butterflies in 2/3 of the position. I believe on the 12th, the market was creeping up. I ran into another delta theta problem. Again, I'm using option view Greeks with the settings that I discussed earlier, and I was running into delta theta ratio problems, so I went ahead and rolled this 810 all the way to 850 to look like this. And then when we had the blow off on Thursday, the market went over 850, and I went ahead and added in the 870 butterfly. And this is what the current position looks like. As of Friday, it's down about $924. We have a maximum acceptable loss of $1,500. The trade is going fine. It starts off as a bearishly positioned trade. It's made for volatile, choppy market conditions where the price moves back and forth. We have not had that since we've entered the trade. We've basically had straight up market movement, no back and forth. One of the great things about the trade is we do monitor delta theta ratios and, among other things, that will tell us that the market environment is very bullish, and the guidelines do force us into rolling forward more on top of the market. And as of right now, I'm still happy with the position. It looks like we're going to possibly grind sideways or pull back a little bit. Would be very good for this trade. So you'll be surprised once the market settles out how fast this profit will come back into this thing. It remains to be seen. And if the market continues up, well, we take a loss for the month. That's just the way it is. Like I said, it's a bearish butterfly, very bullish, low volatility market conditions, so it makes it a little tougher. Again, very good track record for this year. This trade has been excellent, a winner every month except for February. When we go into when we do our yearly plan on our bearish butterfly trades, you should be expecting to lose 2 a year. This may be one of them. We'll see. However, I'm still feeling really good about it and thinking that we'll make out okay for the month because we've already had our blow-off move, which is really nice. All right, that's the trades. I will be looking at, let's see, how many days from expiration are we? Oh, that is not it for the trades. I just remembered. I entered our November bearish butterfly early. But one of the things with the bearish butterfly, and I'm supposed to be doing this by guidelines, so I probably shouldn't have done this, but I did. So, we will follow it. What I did is when we got this big up move, a blow-off move, what often happens, right? Like I said, last time we blew the channel, we go maybe up a little bit more sometimes, then sideways, and fall back down into the trend line. And I really like that. And like I said, I had a price target here, a short-term target of around 880, 890 for the Russell. So I thought this was a really nice opportunity to get into a November bearish butterfly. I think I can stay with whatever market movement we happen to have from here. So I went ahead and did that on, I believe, Friday, or was it Thursday? I think it was Friday. I went ahead and did this and hopped in and paid $13.60 for a 800, 850, 900 put butterfly, and we will trade this from here. And I really like the entry with the market overextended, even though the volatility is very low. Very high probability trade this month, so I really like it. And that's it. That's all I have. I will keep you updated with any changes, and we shall see what the week brings on whether this move is actually going to hold or if we're going to fail and go down and have the market crash and burn. But I have a feeling it's probably going to hold. All right. Thank you, and have a great week, everybody. Good night.